Imagine a legal battle so intense, so high stakes, it feels like it's been ripped straight from a Hollywood thriller. Now, what if I told you you're not just watching it, you're investing in it? Well, welcome to the absolutely fascinating world of litigation finance, where the lawsuits themselves become an asset class. So, how on earth does this actually work? Let's break it down.
I mean, it sounds kind of crazy, doesn't it? Forget buying stocks or bonds for a minute. Imagine placing a bet on the outcome of a legal case. You're not the lawyer, you're not the plaintiff, you're the financial backer. And you're aiming for a return that could seriously dwarf traditional investments.
At its heart, this is often a story about leveling the playing field. Just think about it. An individual or maybe a small company has a rock-solid case against some corporate giant. They've got the law on their side for sure, but they just don't have the millions of dollars needed for the fight. And that's exactly the gap that litigation finance is designed to fill.
Okay, so we've got this cool idea of investing in justice, but what does that really mean in practice? Let's get into the nitty-gritty of what this whole emerging industry is actually all about.
The concept is actually pretty straightforward. An outside investor comes in and pays the legal bills. If the plaintiff wins their case and gets a financial award, the investor gets their agreed-upon slice of the pie. But here's the catch, and it's a big one. If the case loses, the investor gets absolutely nothing. They lose their entire investment. It is a total high-wire act with no safety net.
So why does this even exist? Well, there are really two sides to this coin. On one side, it's pitched as this incredible tool for justice, giving the little guy a real fighting chance. But let's be clear, this isn't charity. On the other side, it is a pure financial play for investors who are chasing huge returns that have nothing to do with the whims of the stock market.
All right, so how does a lawsuit actually go from being a legal claim to becoming a financial asset? It's a way more rigorous process than you might think. Let's walk through the 4 key steps.
Now, the first step here is what's really fascinating. These funders are incredibly picky. They have whole teams of legal experts who vet every single detail of a case. We're talking commercial litigation, intellectual property disputes, the whole shebang. They only pick the cases they see as near certain slam dunks, accepting as few as 5% of the applications they get. If a case makes it through that gauntlet, a deal is struck, often giving the funder anywhere from 20 to 50% of the final award. And from there, it's just a waiting game until the verdict comes in, a verdict that means everything to that investor.
To make all this feel real, let's look at one of the most famous and, most dramatic examples in the history of litigation finance. So let's set the stage. On one side, you have Ecuadorian farmers and indigenous communities in the Amazon. On the other side, Chevron, one of the biggest oil companies on the planet. The plaintiffs were alleging devastating environmental pollution, but had absolutely no way to fund a decades-long legal war against Chevron's army of lawyers. They were the ultimate underdogs. So what do? They turned to litigation funders, like Burford Capital, who poured millions into the case. And then, in 2011, it looked like the bet of a lifetime had paid off. An Ecuadorian court handed down a staggering $9.5 billion judgment against Chevron. For the funders, this was the kind of payday that would make a venture capitalist blush.
But hold on, because the story doesn't end there, not even close. Chevron fought back hard. They launched countersuits, they alleged fraud, and to this day, that massive award remains largely uncollected. The funder's payday is still totally up in the air. And this just perfectly illustrates the huge risk involved. Even a win in court doesn't guarantee a check in the mail. This whole Chevron saga really frames the central question at the heart of this entire industry. Is this a noble tool for justice, or are we just turning our legal system into a casino?
So on one hand, supporters argue it's simple. This democratizes justice. Without it, countless valid claims would just get crushed by defendants with deep pockets. But the critics raise some really serious concerns. Bringing a profit motive into the mix could encourage investors to just hunt for lawsuits, maybe even funding frivolous ones just for a shot at a payout. And then there's the potential for a conflict of interest, right? A funder might push a plaintiff to take a quick settlement because it helps their bottom line, not because it's what's best for the victim. It is a super complex debate with no easy answers.
And despite this really intense ethical debate, the market has already cast its vote. Litigation finance isn't some niche idea anymore. It's a booming global industry. I mean, just look at this. What started as this novel concept over in Australia and the UK back in the 90s has completely exploded. Now look at the bar on the right. Today, the US market alone is worth over $3 billion, and that growth is only getting steeper.
So why the huge explosion? Well, first off, legal fees are just skyrocketing, making it harder for almost anyone to get their day in court. Second, really sophisticated tools like AI and data analytics are getting way better at predicting case outcomes, which makes it a more calculated risk. And finally, investors are always on the hunt for assets that are uncorrelated to the stock market, meaning their success depends on a judge's ruling, not on Wall Street's mood swings.
So here's the bottom line, the big takeaway from all of this. Whether you see it as a force for good or a dangerous gamble, third-party funding is fundamentally changing the dynamics of our legal system. It's arming plaintiffs in brand new ways and turning courtrooms into a new frontier for investors.
It's really the ultimate high-stakes gamble, where the chips are legal claims and the jackpot is justice, or at the very least, a piece of it. So, after all that, the final question is, would you be willing to roll the dice?